Good morning and welcome to this weekly market update from AGM Markets. There's the 11th of June 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar Swiss, Aussie and Gold. Also have a look at the Forex calendar as well. We'll not make any trade calls or recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer on our website, which is www.agmmarkets.com. That would be most appreciated. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the 100 is the purple is 100 simple moving average, and the gold is a 200. Okay, let's have a look at the Forex calendar quickly. So we're doing this video on a Wednesday today. Yesterday and Monday have been very quiet, and it's basically a very quiet trading week. Of course, last week was quite volatile, especially on the Thursday and Friday. We had the ECB and non-farm payrolls. And there was just generally lots of data out last week. If you remember, when we did the video as well, we went through it all. So yeah, this week is definitely a much quieter week. I mean, there's not to say that there's not going to be any interesting moves out there. There already is quite a few setups in play, pretty much from last Thursday and Friday. It sort of shook up the markets and has created some interesting opportunities, and there's some interesting levels out there. So yeah, on terms of Forex calendar, Monday the only sort of high impact thing was from Australia. The Reserve Bank of Australia Governor Stevens spoke. Yesterday it's more overnight Aussie data with the business confidence. UK manufacturing production numbers, which were out yesterday at 9:30, came in line for the expected 0.4%. In terms of today, we've already had some overnight Australian data with the consumer sentiment came out at 0.2%. The main headline for today, though, in terms of where's the main headline? Pretty much, it's UK. Got the UK claimants count change numbers and the unemployment rate. That's at 9:30. It's about 45 minutes from this video shooting. And tonight, if any of you trade the New Zealand dollar, we have some data out there. So you've got the official cash rate, the monetary policy press conference, and the rate statement, all at 10 p.m. GMT. Tomorrow overnight, from Australia, the employment change and their unemployment as well. And at 1:30, the first sort of headline US data with the retail sales, the weekly jobless claims as well, and of course the core retail sales have come out at the same time. And at 4:15, for any of you trade the Canadian dollar, at the Bank of Canada Governor Pelosi speaking. That's at 4:15. And at 11 p.m, quite late for UK really, the Bank of England Governor Carney speaking, so keep an eye on that if any of you trade the sort of Asia session. And then overnight on Friday, Japanese monetary policy statement, you've got the Chinese industrial production, tentative, you've got the BOJ press conference as well. And at 1:30 of US PPI, this is the second sort of headline data from the US. You have Canadian manufacturing sales month on month as well, and to round off the week is US preliminary University of Michigan consumer sentiment. So there's still a bit of data out, but it's definitely a quiet week compared to most in terms of data. Right then, let's have a look at the charts. This is the Euro Dollar, and this is the weekly. What have we been speaking about on this weekly? Well, we initially spoke about this double top here, remember? This was a fib that sort of played out, but then we got this big reversal candle, and it's just been sliding down. So in terms of the next sort of key fib, I mean, a lot of people will be looking at these sort of dips here and that one there, for example, that's sort of holding at 50%. But I think the more obvious one, and the one that I'll have bigger levels at, is definitely that one, I think. So that comes in at 1.3372. So we're still a long way away from that, pretty much about 200 pips away. But that's one to keep an eye out for if we do keep on falling down this week. Interestingly enough, this fib was one that's sort of getting focused on. And you can see we had a nice reversal. Last week's candle is kind of, I mean, there's a lot of lower wick on that, and it has come off the 50 SMA. But I think to keep in mind here, we've had these sort of the weekly open and closes below this 50% here. We're pretty much online, I'd say. You can already see this week I mean, well, last week's candle was a big lower wick, and this week's already forming that, so it's coming down at the start of the week. So I'd not be surprised to see it come back up off of this sort of 50 SMA and get some sort of support. But then again, if it's going to come down to the more sort of healthier levels, the reason I'm looking at this low here is because this was the key swing low in terms of these weekly fibs. That move there, this is the sort of the lows of that move. So that's, and then, I mean, it's the low of 2013. It's just an obvious swing low, and one that you can sort of see it clear on the monthly chart there as well. And also it lines up interestingly there, the 50-month moving average lines up about 50%. But I mean, there's nothing wrong with these sort of dips here. I mean, it's just keep an eye on the price action, really. I mean, this one here is technically playing out, so keep an eye on that. If you get a weekly close above, it can be quite bullish. But yeah, so I mean, let's have a look at the that's pretty much it in terms of the weekly. It's going to be an interesting week, definitely in terms of a weekly candle close. If it's going to keep on rotating towards the upside, this is a really key week, I think, because last week's candle is indicating it wants to keep on going higher with that lower wick, but there is a bit of upper wick on that, so the sellers are still in there. But yeah, it's going to be a real sort of bull bear fight this week, I think. It should be interesting to see the weekly close. Definitely keep an eye out on that. In terms of the daily, sellers who wanted to keep on bringing it down are going to be keeping an eye on this. This is still valid, of course, on the weekly chart as well. It's the high of 2014, so this sort of recent swing low that we've been speaking about. 50% comes at one spot, 37.48. So that lines up with a nice 50 pip increment round number there at the 137.50. So keep an eye on that if we do sort of pop up. You can already see these last couple of days have been quite heavy. In this candle here, this was on ECB day. Big sort of reversal candle there, massive lower wick. Yeah, so I mean another key line in the sand, I think this week, these sort of 135.50s. But interestingly, we have had a daily close above the 135.50s. You can see there, so I would not be surprised to see this daily candle come up, test it, and then even come back down. So it should be very interesting to see. Definitely a key line in the sand for today, maybe the next couple of days there as well, if you look at the sort of shorter term time frames. But if we do get a big pop up, then that's definitely the fib to keep an eye out for. But I think in terms of levels, that 135.50s is a key line in the sand for this week. I mean, in terms of the shorter term subject time frames, I'll just flip to the 4 hour here. Other fib players, I'd have thought would be looking at this move here. It's not the greatest of moves, but it's definitely a swing high on the 4 hour chart, and it's a swing low as well. So keep an eye on that one as well. Also, interestingly enough, this 50%, so just flip it on the 1 hour here, you can see it clearer, coincides with yesterday's reversal line. That's where we start to reverse yesterday, and also it coincides with the 136 handle as well, pretty much to the pip there. So that's an interesting one to keep an eye for. So you've got a couple of interesting levels of 135.50s, 136s. Keep it nice and simple. 2 lines in the sand, definitely, I think, for this week. Cable on the weekly is definitely getting interesting. I mean, of course, I've been saying for a while. I think it's been due. If you just purely look at this weekly chart, I think it's been due a healthy retracement towards these sort of healthier levels at the 50% and towards the moving averages as well. It's still trying to do that. You can see the last few weeks, it's trying to grind lower. You can see last week's candle is a decent lower wick on that. And that was coming off of this fib here, you can see. So remember, the reason I'm using that one, this was the first one here. Remember, this is a weekly chart, so these are big moves. I know they look tiny on here, but if you flip into the sort of daily, it was that move there, remember, so that was the first move. And then if you flip it there and extend, you'll move the low up, move the high up, that's the next move there. So you can see it clear there on the weekly. So this move is technically in play, but do keep in mind that we're making lower highs here. So some people say it's a flag, but some people say it's just going to keep on coming down. So this 50% is definitely a key support level this week, and just definitely a key line in the sand, I think, for in terms of how the rest of the week is going to pan out. So that's it in terms of the weekly. So you've got the two, this fib here is definitely the one to keep an eye out for in terms of the week. And this also moves nicely towards the daily chart. So this is the bullish fib to keep an eye out for. Also have 100-day moving average acting as sort of confluence there as well, and nice. It's been working out as nice support over the last sort of couple of weeks. But remember last week, what were we speaking about in terms of? I mean, if you're on the side that you think would do a healthy retracement on the weekly and just want to play shorts, then remember we had this move a few weeks back at the start of May. That move played out, so off of the 61.8. So keep an eye out and move if you want to. That fib is played out, so move the low down, move the high down, and surprise, surprise, we had a lovely move off the 61.8% last week, and that's still sort of in play. It did chop around for a few days, and then yesterday we finally had the move towards the downside. So it now looks like it wants to come down, test this 100-day moving average. So keep an eye out on that. Ideally, looking for new shorts, you want to see. I personally think you should see a break of this 0% line, because technically the counter move is in play as we speak, which is this small one here. Although in fact, actually, I think that has closed below the 61.8, where it's pretty much sitting on it. But in terms of drawing fib, you want to see a new low form. But anyway, keep an eye out. So let's say if we do break this low here, then this will be the high to keep an eye out for. So it perhaps could sort of come down to there, for example. But no, it's interesting stuff. So in terms of reviewing last week, this was the fib to keep an eye out for, and it's starting to play out as we speak. And that's pretty much it in terms of cable, I'd say. Still keep an eye on this move here. This is sort of valid on the 4-hour chart as well, you can see. So yeah, the 200 SMA acting as a nice sort of confluence there as well. And of course the 168 handle, keep an eye on that as well. That sort of coincides as 50% here as well. Any sort of sellers who think that we're going to keep on grinding lower and that bit in this fib move to play it down to 0%. If you like this, if you're an aggressive seller, then that could be an interesting move to keep an eye out for. So let's say we have bounced up here. Remember, there's UK data coming out at 9:30, so if it's strong UK data, this could be an interesting fib to keep an eye out for. Interesting enough, that the 61.8 does coincide pretty much with the 168 handle, so it's just 4 pips above that. So if you flip it to the 1 hour as well, you can see it there. I mean, you could take that fib there. That's perfectly valid as well. If you want to look at the reason I personally looking at that one is because it's valid on more time frames, and it's the pretty much swing high. So it's a swing high on the daily, swing high on the 4 hour, and there on the 1 hour as well, you can see it. But there's nothing wrong with looking at that one as well. It's best just to keep an eye on the price action and see how it acts out. Dollar Swiss, this is on the weekly. What have we been speaking about? It's all about this. Remember, we had this nice move off the 0.87 handle. That lovely weekly reversal candle there put in, and then it's just been grinding higher and higher. And you can last week's candle, yes, there's a bit of upper wick in that, but it hasn't quite tested the 50 SMA. So you can already see this week's candle is trying to grind higher and higher and make a test off of that 50 SMA. And in terms of, that's pretty much it in terms of the week. There's nothing else major there. I mean, you can look at these sort of fibs here. I mean, we've been speaking about that one for a while, but that's pretty much where it is kind of still in play. But interestingly, that 50% initially acted as resistance has then been acting as new support. So that's why we're sort of grinding higher. And then, but the fib, the only really interesting fib I think is this one here. So that's at the high of 2013 to the low of 2014. So yeah, we'll definitely be keeping an eye out on that over the next sort of few weeks. In terms of the daily chart, nothing major of interest here. I mean, I thought this was going to be an interesting move. I thought it would come down to the sort of 50%, but it actually came off the 38.2. I'll draw that up. I'll just quickly put it up on there so you can see it. You can see there pretty much to the pip. also that coincided with this previous sort of resistance around here, so previous resistance turning into new support, and that's why we're sort of grinding high really. But I thought this sort of daily candle here, a big reversal. I was surprised that didn't come down a little bit further, but no, this 38.2 acted as very nice support indeed, and it looks like it's just going to keep on grinding higher, to be honest. And that's another sort of, I mean, because I've been saying for a while, the euro dollar and dollar Swiss have been acting as the correlation between them has just been ridiculous, and that's one reason why I've personally not found these smaller fibs here on this week. I prefer to look at the bigger sort of move there, because I do think, I mean, you can already see this week from a sort of reversal candle last week, it's come down straight away. So the sellers definitely want to keep on bringing it down. So I would not be surprised to see these lows sort of break here, and we come down even to perhaps towards this sort of 200 week moving average over the next sort of few weeks. But anyway, back to the dollar Swiss. You can see there, just looks like it's in grind high mode, to be honest. And in terms of shorted, so I mean the 4-hour chart, nothing major of interest here. I mean, this is a swing low here, but it's not really a new swing high. You want to see it sort of break this hard, I thought, in order to be fibbing this move. So hopefully we'll sort of break highs here over the next couple of days, and then perhaps get a nice retracement down, and then that fib could be an interesting one to keep an eye out for. But it's all about just playing the dips, I think. Any sort of small retracement. So I mean, currently we're at the 0.90 handle, so we're currently seeing some resistance here. So we could sort of get capped here, and then perhaps come down towards the sort of 89.50s. Then come down towards the 89.50s, and then get some sort of reversal there. So keep an eye on that. I'll definitely keep an eye on those two sort of levels over the next couple of days, but nothing major of interest in terms of setups forming at the minute. And similar to Aussie, to be honest, it's still chopping in between this 200 pip range. We've been talking about it for the last sort of, I don't know, about 8-9 weeks. You can see there, I've left this up from last week. It's looking for a breakout, and to be honest, last week's weekly candle nice and bullish. The previous week's candle was bullish as well off these 0.92s, and we're quite near the 94 handle as we speak, only a few pips off. So keep an eye on the action on that. I'd not be surprised to see a weekly close above here this week, and then the next few weeks I'd think we'd come up and sort of test this 100-week moving average. But it's all about this 0.94s. I think it looks like it's going to come up here, and it looks like it's going to test, and then it would be a triple sort of top here, and triple tops have more chance of breaking, in my opinion, than double tops. Imagine it as a sort of ceiling. The more times you sort of you punch it, or like a floor in the way, the more times you test it, the more chance it's got of breaking. Okay, let's have a look at gold. I pretty much left this up from last week as well. Gold, what it's about is the 1242s, key support, and that's valid on sort of 4 hours where you can see lovely basing. We spoke about that last week, and the odds were for some sort of retracement towards the upside after such a heavy sell-off. And you can see here textbook basing, and it's just slowly grinding higher. In terms, well, I've left this trend line up here as well. The fib that I personally keep an eye out for is not a clear one, but I'd say this sort of high here, and that's the high off the trend line, and that is the high pretty much. You can see there. In terms of this trend line, I've taken that high there. I'm not using these ones here and bringing it in. That's pretty much the tip of the trend line. That's why I'm purposely use it as the high for this fib. So what I personally do is to see if it looks like it's going to keep on grinding higher for the rest of the week. Keep an eye on the 50% and 61.8, and hopefully we'll get some sort of confluence with this trend line here in a nice reversal. And I think we could get an interesting selling opportunity there. But of course, it could easily break this trend line and fly up. So keep an eye on that. It's all about just keeping an eye on the action, really. Of course, don't forget this 50-week moving average as well. That's been capping the pair for quite some time, so it could break the trend line. It could break the trend line, test that 50, and then close inside it. So don't forget the weekly candle closes there as well. But that's the fib to keep an eye out for. The trend line, you've got the key levels there as well. And that 50% is just above 1270 mark as well, so I'll stick that on the chart and see how that acts as well. Okay, then that's all for today. I hope you found this video useful. If there's any other pairs that you want me to take a look at next week, then feel free to comment under the YouTube video or send us a tweet to our Twitter feed, which is at AGM Markets. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.